head of sales at EmpowerRD. So I look after kind of all things customers, new business, and then joined as well by John Yeomans, who's just joined EmpowerRD kind of 2 or 3 months ago. If you just want to quickly introduce yourself, John, and give your
sure.
background.
Good morning, everyone. I'm Jonathan Yeomans. I work as the tax lead at EmpowerRD. So I previously worked at HMRC in another life for just over 30 years. So I was a project board lead at HMRC, heading up the team that looked at corporate tax returns for compliance purposes. So company returns containing R&D claims and claims for other reliefs, specifically in the small business sector. But now I'm here at EmpowerRD, helping with their R&D.
Fantastic. 2 quick bits of kind of housekeeping, I suppose. One, first of all, Chancellor obviously spoke things last week. We're going to focus on the R&D element, just in case anyone's here trying to get some insight onto the kind of national insurance rise or something like that. And second piece as well, if you can just when you join, just ensure you're on mute as well, so we don't pick up any noise. But the very quickly, I think majority of the people on this call actually today are already very wisely empowered customers, but there are a few people who I think potentially just looking at bringing EmpowerRD on as their R&D specialist. But just want to give really quick background on who we are. So we're obviously an R&D tax claim specialist. Our real kind of objective is to take the complex claiming by combining expert knowledge, so that's people like John, and then we combine that with advanced technology. So we give customers access to a platform which helpfully will update to reflect a lot of these changes that are happening now or happening in a couple of months and years. The overall goal, you can just see it there on the screen, really to protect your business from risk, fully optimize your claim, which is a key point. And then something that we're really passionate about, and I know Harry, who founded the business kind of 5 years ago, was very much about bringing transparent pricing to this industry. So that's something we really pride ourselves on, is our pricing structure. But moving on the agenda. So just a quick recap of the scheme. We've broken down the spring statement then into 2 separate buckets. One is on around inclusions. The second piece then, the new announcements around kind of the bigger picture. We'll have a bit of crystal ball gazing. Potentially don't hold us to that, but this scheme, the big thing about this scheme is that it continues to evolve and has been since it was founded, 20 plus years ago. And then we'll have a Q&A at the end of the presentation. If you do have to jump off for whatever reason, feel free to just put your full name and your question in the chat box, and then someone from the team will be in touch ideally later today, and ideally with the answer. But on that, just wanted to hand it over, John. Just a quick recap of the scheme, I think would be quite useful just to set the scene.
Yeah, sure, Ronan. No problem. So obviously we're here talking about the research and development, the R&D elements of the spring statement from last week. And the R&D scheme, it's been around now for just over 20 years, so since the year 2000. And essentially it's there, it seeks to reward companies for investing in innovation. So that's companies who are developing new or improved products, processes, or services that somehow improve on existing ones. And specifically, you need to be engaged in a project that's seeking to achieve an advance in science or technology. A key factor within the R&D scheme, in order for something to be eligible, it has to be attempting to overcome a scientific or technological uncertainty. So something that can't obviously be solved by using information in the public domain. I think most of the people joining the call probably have a good understanding of what R&D is. This isn't going to be a training session, so we're not going to go into minute detail about the do's and don'ts of the scheme. But one important thing to pick up is that the scheme's divided into 2 separate elements. So there's a scheme for small companies, small and medium-sized enterprises. So that's companies with less than 500 employees or 100 million euros turnover. The scheme for SMEs is more generous than the other scheme, which is for larger companies, which is called the Research and Development Expenditure Credit Scheme. So that's RDEC, RDEC. So you'll hear us mention RDEC a few times today. Primarily that's for larger companies, but some smaller companies, some SMEs will fall into the RDEC scheme if they've received state funding, or depending on the circumstances, if they're doing subcontracting for a larger company. So two schemes fall under the umbrella of the larger Research and Development Tax Relief Scheme. And I guess one final thing to pick up, we're not just talking about high-end research and development. It's not the scientists in lab coats who are entitled to claim relief under the scheme. The scheme has always been drawn quite widely in terms of the definitions within the legislation. So when HMRC publish their statistics annually, you normally see that about 90% of the different business sectors have claimed in the past. So I think it was 19 out of 21 key business sectors last year. So it can apply to lots of different businesses. And if you want more detail, get in touch with Empower. There'll be a link right at the end of the presentation with contact details. And if you're new to research and development and you haven't claimed before, then get in touch with us. But yeah, I think that's probably hopefully set the scene for R&D, Ronan.
Nice one. Thanks, John. And I think a key slide that we just wanted to highlight was just as a question I'll put to you, John, as such, like getting back to the spring statement, how does it actually compare to previous years?
Oh yeah. So that's a good slide there. So this wasn't a budget. This was a spring statement last week, and we have the government has tried to get into a pattern of having a spring statement in the spring, obviously, and then a budget later on in the year. And the spring statement is more of an economic statement, an economic health of the nation address, if you like. Whereas the budget is where you see the more meaty tax policy information. But last week, although it was a spring statement, it was more akin to a mini budget. So there was quite a lot of tax policy in there, I guess, reflective of the current state of the nation. There's a lot that needs addressing. This slide here, we've done some analysis on budget and spring statements over the last few years. So going back to Philip Hammond there in 2019, and obviously the latest statement there on the right. We've done an analysis of how much R&D content there was in these different statements. And you can see that there's a gap in 2019 and 2020. There was no autumn statements those years. So although they have tried to get into a pattern because of COVID and the general election, it hasn't quite gone to plan. But it looks like Rishi Sunak is now getting it back to that routine of a spring statement and an autumn budget. But this March 2022 statement, the green column there is how much R&D content there was in the speech. The red column is when you start digging into the underlying documents, how much detail there was around R&D and research and development. You can see that last week there was more than the average, so it was reasonably R&D heavy, not quite as much as in October last year, but quite a lot that we're going to pick out today. So probably seven key areas where there was big announcements, and we really get to the meat of those by looking into what they call the red or the blue book. So this is the red book that gets published at the time of the budget, or the blue book that they now publish along with the spring statement. So a lot of announcements, perhaps not as much detail as we would have liked at this stage. More stuff to come, but certainly enough to give us a flavour of the direction of travel that the government has in store for R&D. I guess one final thing to say from this slide here.
Yep.
The trend is up. It seems to be R&D seems to be more of a feature of government policy now going forward.
Yeah, very, very much so. It's just great to see that kind of commitment from the government. So if we go into new announcements on the inclusions piece, I think the first piece was just around data storage costs. If you just want to cover that very briefly, John.
Yeah, sure. So great news, good news. So this is one of the inclusions. They're bringing something into the scheme that wasn't previously included. So this is good news for many businesses. They had announced last year that cloud data costs would be coming within the scheme from April 2023. But specifically, the new bit last week was the announcement that they will be bringing in data storage costs into the R&D qualifying expenditure remit. So they had previously wanted that to be separated out. Obviously, that could be onerous and additional admin on businesses in terms of separating that out. So it's good that they've now broadened the definition to include that. And it's something that we were calling for in our consultation response on the budget last year. So potentially this is making it possible for businesses to claim thousands of pounds of relief that they couldn't claim before. Lots of businesses will be doing research in the cloud, data heavy research, and from April 2023, which is when this comes in, that will potentially be eligible to the extent that that represents your research and development element. So yeah, great news and a welcome inclusion, and I guess a modernisation, as we said there on the slides, of the scheme represents that things are changing.
Very, very much so. I don't know if anyone here has the probably not, but if you've ever gone through the kind of original HMRC R&D guide, it refers to kind of camcorders and things like that. So it's great to see they're moving into the 21st century. I think one thing I'd flag very much, like bringing it back to kind of practical items at the bottom, like from a customer perspective, what you should look to be doing is very much start tracking those cloud computing costs, both on the data processing, data storage, and get a sense, try and build up a sense of what percentage of those are applicable to the R&D side, and what are then just kind of BAU costs as well. So that's something definitely to keep an eye on. Moving on to then the pure mathematics. I wasn't great at maths as in school, so hand it over to John again.
Yeah, I was okay. So yeah, another extension of the scheme, and something that is actually quite dramatic here. So the expansion of the definition of qualifying R&D activities to include pure mathematics. And when you go back, we said the scheme started in the year 2000. When you go back to the original DTI documents about what is and isn't R&D, and that's something that HMRC still refers to now, pure mathematics was always one of the ones that was singled out as not being eligible. So this is quite a dramatic change of direction that the government have announced, to say that costs around pure mathematical expenditure, staff costs for people involved in that kind of work, will become qualifying from April 2023. Again, we need to see all of the detail around this, but potentially bringing in tens of thousands of pounds worth of staff costs that people can apply in future years. Lots of businesses will have mathematical elements. Insurance will have people, finance companies will have people sitting there, mathematicians working through a lot of theoretical work that is then eventually transformed into some kind of tech. So it's maths on the journey towards an advance in science and technology. But up to now, none of the mathematician costs, none of the pure math costs could be claimed under the scheme. So this is a really welcome inclusion and quite a gift, I think, from the Treasury. And as it says on the slide there, you've got your quantum computing businesses and your artificial intelligence and robotics, but also lots of other businesses will have elements of maths theory as on that journey to the final advance. So manufacturing, architects working out the stresses and strains of different new building materials, the construction industry, manufacturing industry. So quite a wide area here, and things, something for people to think about quite widely now over the next 12 months before this comes in.
Yeah, brilliant. It's rare you hear gift and treasury in the same sentence. So yeah, it's good news on a Friday. Thanks for that. And then I think this is one that I think has certainly been a topic of discussion in Empower, just around the overseas R&D activities. Again, John, if you want to kind of give your view on this.
Yeah, so this is the kind of last of the third inclusions, if you like. This is a bit of a weird one, because at the moment you can claim for overseas R&D activities within the scheme if you're a UK-based company. 6 months ago, the government said that they were going to be refocusing R&D to the UK. So there was almost the suggestion of a blanket ban on overseas R&D expenditure and they asked for a bit more feedback before that came in. We were one of the companies that responded and said that, we think you need to hang on here a minute. But there could be quite legitimate reasons why companies need to undertake the activities overseas. They simply might not have the environment in the UK to carry out those activities. If you're doing deep ocean research into some kind of new advanced vehicle, then you might need deeper oceans than we've got off the shore of the UK. And if you're developing an advanced desert terrain vehicle, then you need to find a desert. So we said that they needed to make sure that there was exceptions within within any changes to make sure these kind of things were included. And great news in the spring statement last week, the government said that, as you can see there, what it means, second bullet point. So where there are material factors like geography, the environment, the population, or other conditions that simply aren't present in the UK, then you will still be able to claim for expenditure on overseas R&D activities. And also the final bullet point there could be other kind of resource or legal constraints that just mean that you can't do the R&D in the UK, and it needs to take place abroad. So clinical trials, if you're trying to release a drug in the US, the FDA needs to see that the trials are taking place on US soil. So, it was great that the government has accepted that this needed softening, this policy, and they've announced that. And we haven't seen all the fine detail of exactly how this works in practice yet, but a welcome extension of what could have been quite a clamp down on certain costs.
Yeah, very, very much so. And yeah, great to see. I think, Empowered, we're part of the R&D Comms Forum with HMRC. So feeding, what we're getting from our customers, we listen to our customers and we're feeding that back up. I think it's a sign of the kind of good working relationship that we have with HMRC. So yeah, great to see that they have, they've softened their stance in that regard. If we move on then, new announcements, as I said, we split in two buckets, one in terms of inclusion, second one then just around the bigger picture. I think, yeah, the continued commitment to the R&D scheme, I think we kind of highlighted that in one of the first slides, if you recall, about the bar charts, March 2019, Philip Hammond barely mentioned R&D, and it's something that's certainly October last year, this spring statement, the upcoming autumn 22 budget, I think will be a huge focus on R&D. It's something there's been a huge commitment to it. If you think of, there's the leveling up agenda, but there's even kind of quantitative targets in place. The current spend in terms of UK GDP is about, in terms of UK GDP on R&D is 1.8%. There is a focus to get that north of, certainly north of 2%, closer to 2.5%. To give you a bit of context, a comparable economy size, Germany, they spend over 3.2% on R&D. So I think that's something that, the scheme it's great that they're looking to edit, update it, improve it. And there is a huge focus when certain other elements of, when you're going through kind of austerity or, tightening from number 11, they're being less generous, but I think the R&D scheme is something that they'll really look to continue to push forward and drive forward. So I think in terms of just the practical steps, that top bullet point is so crucial in terms of it's going to continue to be a valuable source of UK business funding for many years to come. And I think the 22 autumn budget is going to be quite significant in terms of what actually, how the scheme, will be. We've already heard gift and treasury in a sentence, and how that generosity will be modernized, but will also continue. And then this is a really interesting one, is around combating abuse. If I can, John, if you want to pick this up in terms of the combating abuse.
Yeah, sure. So we saw a clear statement in the spring statement that they are looking at ways that they can combat abuse of the system, and it's kind of a theme that's been going on for a couple of years now. There's been consultations around this over the past couple of years. There has been a couple of high-profile cases that we know about where people have set up a structure to claim R&D costs, because it is a very generous scheme, one of the most generous in the world, our R&D scheme. So companies have set up fictitious companies, shell companies, if you like, to take advantage of the reliefs on offer. These have invariably been picked up by HMRC before the money was paid out, but it's kind of given them a picture that there are certain elements out there seeking to abuse the system. So there's a lot of work going on around this. The pay-as-you-earn cap that was introduced or mentioned a couple of years back and is now in force around R&D. That is something that's a direct attempt to combat fraud and abuse within the system. That was the motivation behind that being introduced. Last week, we were told that there's 161 million pounds that's been given or will be given to HMRC over the next 5 years for compliance. And as we saw on the third bullet point there under what it means, the Public Accounts Committee and the National Audit Office are pressurising HMRC to improve their compliance around claims within the system. So part of that 161 million, it won't all be going to R&D, but part of it will be to improve R&D compliance. We know that there was 100 additional tax inspectors taken on in the last 18 months within HMRC, specifically focused on R&D compliance. So there's a lot of work, there's a lot of things going on behind the scenes to make sure that the right people get this money. And as we said there's some practical steps to take around this. There was some things that were mentioned in the last autumn statement, and you might want to pick up on some of these in a minute, Ronan, but we already know that there'll be more scrutiny and more compliance, if you like, more regulation around this area from April 2023 onwards. So they've said that all claims need to be made digitally going forward. You can still make a paper claim. They've said that the R&D narrative, the report that's sent in to support the expenditure, that will be probably more prescribed in the legislation going forward. At the moment, it's the format of the report is not laid down in the legislation. So at Empowered, we give a lot of detail to support any expenditure that we send through to HMRC on a claim. We're not obliged to do that. That's not mandatory. So we do that to give HMRC as much information as possible so that they can see that the claim is valid and meets all the criteria. But we'll probably see the format and the content of those reports a bit more prescribed in future. Probably will align with what we're already doing, but it'll bring everybody up to the same level. And there'll be certain more accountability. I think companies will need to sign off any claims. There'll need to be a senior officer at the company signing off the claim, and any advisors that have contributed to the claim will need to be named to HMRC, whereas currently that isn't mandatory. So there's a couple of other practical steps there as well, Ronan. I don't know if you want to expand on any of those.
Yeah, I think I'd even take a step back, and if we look at it from like a macro viewpoint, I know some like if just from a customer's perspective, or even, you know, I think you can be looking at all these changes and a lot of further changes to come in the autumn budget, and think, okay, this scheme is potential, you know, it's going through quite a big change, and it looks like then here as well, you know, the claim needs to be endorsed, that the stakes are higher, we're going to be held more accountable. So I'd even just say, look, take a step back. That's why people are quite comfortable, or very comfortable, using a company like Empowered. You know, that's what we're here for. We're an R&D tax claim specialist. This is the only product that we you know, that we focus on. It's the only service that we provide as such. So we're here to stay on top of all these changes and ensure that, you know, yes, we're going to look to excuse me, optimize your claim with a transparent, you know, price attached, but we're going to be thing, you know, that's our reputation is built on that, in terms of that 100% payout track record. That's, you know, you kind of as you all know, everyone runs business here. You live and die by your reputation. So that's, I'd even say, look, there's a lot of changes happening, and a lot of changes, particularly over the next 12 to 18 months. But you can rely on EmpowerRD to help you, or just to ensure your claim is absolutely spot on. Even that top point there in terms of they need to include, claims need to include the details of any agent. Our claims already go through. It's quite obvious that they're from EmpowerRD. We submit kind of 2 or 3 claims per day to HMRC. We've a very good working relationship with them. We're on their comms forum. So it's very different from a lot of other, a lot of competitors who will, build a claim for you, hand it to you to submit, and there's no mention of them in the background. Well, we like to think HMRC, they see an EmpowerRD claim and they think, okay, there's quite a bit of work has gone on here. So yeah, definitely, that's what we're here for as such, to ensure that you're comfortable with the claim that you're submitting. And then, yeah, very quickly, the last point on the bigger picture piece, John, if you just want to touch upon the RDEC rate increase.
So a really strong hint that we're going to see a probable increase to the RDEC rate for large companies and certain smaller companies in certain circumstances, announced in the autumn. And what it means, the second bullet point there is basically the sentence that was uttered last week. So we were told that the R&D expenditure credit may be changed to make it more generous and internationally competitive. But there's a lot of other noise around how the RDEC scheme is seen as potentially being more economically beneficial than the small and medium-sized enterprise scheme within the R&D field. So yeah, I'm sure we'll see an announcement there. And we've picked up on under what it means. The first bullet point, the rate is currently 13%. The way that this works, it's applied as an above-the-line credit and a cash credit below the line. So the above-the-line credit is taxed at the prevailing headline rate of corporation tax. And then what's left is the net benefit that you get as a cash credit payment. So although it's 13%, the net element is only currently 10.53%. Now we know that the corporation tax rate is going from 19% to 25% from April 2023, so next year. As a direct consequence of that, the net benefit of the RDEC scheme will reduce. If you did nothing else, it would reduce anyway because the corporation tax rate is going up, and it'll reduce down to about 9.75%. So in order just to keep pace with where this credit is at the moment, you need to increase the rate by a couple of percentage points potentially. So at least 14.5%, which is equal to the SME loss surrendering value, and probably a bit more if you're going to make it more generous. So yeah, I think we're going to see some changes here, and it may even go beyond that. We'll wait and see. We'll get an announcement in the autumn by the looks of it.
Nice one. Thanks, John. Good to see that word generous showing up again. Can't complain. And then, yeah, I suppose, yeah, I think we've kind of touched upon this throughout the presentation. Like the 22 autumn budget, I think is going to have a lot of, the devil's going to be the detail there, as we've mentioned. Further changes, are being considered, very much being considered, and I think we're going to see a lot of them being announced in the autumn budget. With a view, then we've got a finance bill coming out 2023, so April 23. A lot of this will be going live. So yeah, I mean, from the practical viewpoint, like of putting, in the customer's shoes again, very much like on that consultation piece, feedback, like if you're existing customer empowered or looking to become, we have those kind of channels already in place that you can feed back. And as we've seen that with the overseas R&D, we do feed that through to HMRC, and they actually take that on board and ensure that it reflects the reality of kind of businesses on the ground. And very much so we find as well, the second point, the R&D tax advisor, keeping up to date with these changes, which will, are going to be significant, as we've kind of alluded to. We have a number of accountants who previously would have done the R&D tax claim for their kind of book of businesses as such, and now are looking to kind of to bring us on board as a partner, just because the scheme, which didn't really go through a huge amount of change in the first, say, 20 years of its existence, is now that is happening. So it's something that, you know, you need to stay on top of. But if you're, you know, in the finance or potentially the tech department of a business, you know, you probably have a huge number of items on your plate that you need to stay on top of, and that's why people look to bring EmpowerRD on as a partner, because this is what we focus on. This is what we you know, will stay on top of it, and we'll definitely be doing a webinar post the 22 autumn budget. This, yeah, crystal ball gazing, this is I definitely have to caveat this by saying don't hold us to it as such. But John, there was a couple items, yeah, if you want to just kind of run through them briefly, on, you know, what we think may happen is probably how I'd phrase it.
It's pure crystal ball gazing stuff, as you say. So, but it's crystal ball gazing with an eye reading between the lines of what was announced in the spring statement last week, and other statements like the Chancellor's May's speech that he made earlier this year, and kind of picking up on the direction of travel here. So the first thing that we've got there is a potential consolidation of the SME and RDEC schemes, and this is only our we think we're getting a hint of this, but as we say, we don't hold us to any of this. We'll wait to see what further information comes out. But we think there's a lot of noise about the RDEC scheme, as I mentioned earlier, being more economically beneficial for the UK than the SME scheme. So there's been surveys measuring how much pound for pound the R&D tax schemes kind of lead to a domino effect in terms of money flowing out into the wider economy, or being reinvested by the company back into more research and development. So the RDEC scheme has been costed at £1, brings an actual longer term benefit of about £2.70 currently in the UK. It's not that's not the best in the world by OECD terms, but it's not bad. Whereas the SME scheme is less than half that, between 60 and £1.28. So the government's seems to be getting a lot more bang for its buck from the RDEC scheme. We've been told that the RDEC scheme is potentially going to be made more generous. We suspect there may be a merging or a consolidation of the two schemes at some point in the future. It won't be from April 2023. It's too dramatic a change, I would imagine, to happen that early. But we may see the start of some consultation or some work around that announced in the autumn budget. So yeah, something to keep an eye on. That's the first bullet point there, and obviously something to plan around it if that does happen, and you've got time to take advantage of the SME scheme before it ends.
Fun.
The second one there, levelling up. We know the levelling up agenda was cited as a big part of government policy earlier on this year. There was a document published, the levelling up report. It was chock full of mentions of research and development and R&D, and how the government intended using the research and development tax system to help encourage more investment outside of London and the southeast, in the north and the Midlands, and how they would potentially look to use the tax scheme as a lever towards encouraging further R&D in areas that haven't had as much investment historically. We didn't see really any mention of that in the spring statement, so we think that there may be more to come on this. Don't know how the government would achieve it. Potentially you can have different rates in different areas within the country. Very difficult to administrate, but potentially, but something that I think we'll see something announced either in the summer or later on in the year. So watch this space. All of this is wrapped up in the fact that we'll probably see another R&D consultation soon, which is the third bullet point there. We've had 4 in the last 3 years. I'm sure we'll see a 5th one this year. I'd put money on it. It may come in the summer, it may be in the autumn budget. There's a lot of change, a lot of reform that seems to be in planning around the R&D scheme. As you say, we're now looking at something that's now more than 20 years old, and the world has changed a lot since then. So perhaps we are approaching quite radical reform soon, but the government would consult on those before heading down that path normally. And the final bullet point under the further changes, draft legislation in the summer. We know that's coming. We've been told that it happens every year. The Finance Act, the Finance Bill gets published in the summer. There's an opportunity for final scrutiny before that becomes law, becomes final. We know that there will be a lot in this summer's publication around R&D because we've already been told that. And when those details are out, we'll be picking over that with a fine tooth comb and trying to convey that to our customers in plain English and language, and we'll be taking advantage of the fact that there is an opportunity to influence the direction of travel before that comes final, and feeding back on any areas where we think further thought perhaps needs to be given. So yeah, that's our crystal ball gazing section for you.
Nice, thank you, thanks, John. Yeah, I think the change will happen piece is, I think, yeah, just reiterate that, and yeah, a lot of it's going to be coming in the in the autumn budget, the tail end of this year. And then Q&A, we've been sent a couple of questions before the webinar, which I'll kind of run through. I'll ask John a couple of these. One, I think, yeah, we keep mentioning the autumn budget. When very simple question, when is the autumn budget?
Yeah, great question. So last year it was the 27th of October. We have had them in November, so it'll be probably late October, November. The date hasn't been announced yet, so we don't know for sure. But yeah, keep a lookout, and as you say, soon when it happens, we'll have another one of these sessions, probably a lot more detailed than this. I think when we were looking at that graph earlier, I think it'll be off the scale probably in autumn, the amount of R&D content in the autumn budget. But yeah, late October probably, I'd probably guess.
Yeah, definitely. One that we were asked as well was just from a customer's perspective, how can I feed into the consultations? This one, like, we'll definitely be soliciting feedback from clients, and that's something we'll kind of look to do probably over the summer once that new consultation, you know, I think it's going to be the 5th in 4 years. If that gets the green light that John mentioned, we'll be doing it proactively ourselves, but also yourselves as customers of Empowered, very keen to hear your feedback on how you would like the scheme to look, and we will, as we're part of the the R&D comms forum with HMRC, we'll be very keen to feed that back. One for you, John, it came through is what will EmpowerRD do to be ready for these changes?
So, I mean, as you say, we'll continue to input on the consultations. We do sit on the RDCF forum. Not everybody does, not every advisor does, so we're quite privileged and proud to have a seat on that forum. Gives us another opportunity to speak into HMRC's ear and influence the potential direction of travel in this area. I guess one of the most important things is we've got a technology, we've got a platform for R&D claims. So that gives us the power to tweak that, to take account of any changes in legislation, and to tweak that quite quickly, so that we can lead customers in the right direction and make sure that the claims are compliant, and make sure that they're giving the right information. So when it comes to things like restricting overseas costs, we can build we can build flags for that into our platform to pick up those costs. We said earlier, we don't know exactly how government or HMRC will expect people to account for some of these costs. So if there are specific measurement or apportionment guidelines that are laid down in the legislation, then we'll build that into our platform to make sure that we're counting these things in the right way. So yeah, and we'll proactively communicate with clients. So as we get new announcements, as we get draft legislation published, if we do see any further supporting documents published at the same time, we'll be translating those into an easier to understand language and communicating that to our clients. So we've got monthly newsletters that go out, bits on our website, and we're watching this, we're watching this space. So yeah, that's pretty much what we're doing.
Very much so. Yeah, and I think as well, if you're kind of, you might be on this call just thinking, my God, I'm kind of lost to a certain extent. Or if you're if you're new to R&D, we have just in the last 2 or 3 weeks published and we call it the Ultimate R&D Guide, which you can find it on our website, or happy to send that out, which is really quite. Really quite useful. I'm mindful of the time, 10:43, we're doing quite well. God knows I've been on webinars presenting that have vastly overrun, so I'm quite happy with this. But I'll kind of open it up to the group. If anyone does have a question that they want to ask, otherwise there's the contact details, team@empower.com, or you can indeed book a call, empower.com/contact. But is there anyone that might, just as we hit 10:44, have a question, or you all looking for that second cup of coffee, power you through the rest of the Friday and into the weekend?
Yeah, I've got a question. On the overseas R&D, we use a lot of contractors for our development work, and they're actually in Czech Republic. I know I've had this conversation. I think, John, we might have touched on it. I'm just wondering if they've softened up on whether it's because we can't get the skill resource in the UK.
Yeah. Hi. So resource was one of the things that was alluded to in the statement last week. So yes, potentially they have softened up. As we said, you will probably still need to demonstrate to HMRC why you can't source that resource in the UK. So documentation to support that needs to be given to that beforehand. But there are certain resources that can't be sourced in the UK. So there is a softening there. I think we'll. So last week, that said that potentially that kind of thing will be qualifying. We will see the nitty-gritty of the final detail in the UK, and they have accepted that can be sourced overseas. What we don't know as well is exactly how this will work. It may be that you need to ask in advance whether or not you can include those costs. So we don't know whether or not it'll be a case of claiming them and then justifying it if you ask by HMRC afterwards, or an advance request to include those costs. But record keeping will kind of be key on that. But yeah, I think positive noises around that, Judy.
That's great. Thanks, John.
Thanks.
Fantastic. Thanks for the question, Judy. It's 10:46. I think we might leave it there. If you do have a question, feel free. team@empower.com. As I said, I think there are a number of customers here as well on the call. So you have a claims manager you can reach out to. But many thanks for joining us on a Friday morning. We'll definitely be having a webinar post the autumn budget. But otherwise, I'll leave you all to your Friday. Have a great day.
Thank you.
Thanks very much. Take care, everyone.
Thanks. Bye.
Okay. Bye. Bye.